Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is November 17th, 2012. Lots to talk about, so let's get crack-a-lacking. But before I do, the very first thing I want to say is thank you very much for those 5 of you who clicked the like button on my previous video. I do really appreciate that. Again, I'm not making any type of money at all on these videos, so I do appreciate it. It does give me that drive to push forward and to continue making these videos for you guys. In any case, I just wanted to say thank you very much. So let's get started here. This is a chart of the SPY, which is the ETF that tracks the S&P 500. And if you've been following my videos for a while, then you know what all these lines are. It's actually not as bad as it used to be. But if you're just new to these videos, I'm gonna pause this video real quick just so I can delete most of these lines, and I'm gonna leave the ones that have any type of relevance in the near future. So let me just get back to you in a second. All right, so most of you know how accurate these mathematical calculations are, um, but how have they been holding up as of late? Well, to me, to be honest, if you have been watching my videos and been trading the way I've been trading, maybe you might be making as much money as I am today, or possibly more. The whole point being that these trades that I've been taking and these videos that I've been making hopefully guided some of you into making the right decision and going in the right with the right way of the market. Okay, I'm kind of tongue twisted. It is, really early in the morning. Please forgive me. So let me just dive right into it to let you guys know what exactly I'm talking about. This yellow line over here held up for an intraday trade over here. Let me just delete that and then bring up my trend line here. This level here held up intraday. This level here held up very beautiful for two intraday movements, right? And then now we have this level here, which is the 135.40. So basically what I did for this week was I dumped my SDS, which is the opposite or the inverse to the SPY. It's a two-time inverse to the SPY, and what I did was I sold. So basically buying the SDS long is selling the SPY short. So I had picked up with not contracts, shares on the SDS, and I sold those at 135.40 at the 135.40 level when the SPY hit around that level. So again, the SDS is a two-time, but it is opposite of the SPY. So let me just give you a quick show you real quick what I was looking at on the SDS. Alright, so this is a chart of the SDS, which is the daily chart, and what I've done was I had a level here at 61.42, and I said, okay, because it's in the 200 moving average and because the SPY looks like it's going into some pretty good support, I'm going to dump my SDS and turn it around and go short the SDS by going long the SPY by buying the SSO, because the SSO is a two-time ETF for the SPY. I hope you guys are following me here. Basically, the SPY is a very expensive ETF, and it doesn't really move very much. And so if you don't have millions of dollars, or at least $500,000 to buy a whole bunch of the SPY ETF stock, or ETF I should say, then you're really not going to make that much money. You need money to make money off the SPY. So what I do is, if I want to short the SPY, I short it by buying the SDS long, which is inverse to the SPY but times two. And it's also cheaper, right? As you can see. At the same time, the SPY, when I want to go long the SPY, I buy the SSO long, and that gives me a two-time long for the SPY. So basically, I do short stocks, but at the same time, for the SPY itself, or the S&P 500, because the SPY is the tracker for the S&P 500, I normally buy the two-time uh, I guess ETFs or ETF trackers. That way I make double in percentage. Okay, so I just want to make that clear. I didn't want to confuse any of you, but in any case, I just wanted to show you this candle here. The high was 61.43, so I sold this at 61.42. Okay, so that was a pretty good profit there. I sold 75% of my shares. Okay, so just keep that in mind. I still have 25% left. Just as an example, if I had 100 shares, I sold 75 and I'm keeping 25 because this is the time where I can be greedy. Okay. All right, so I've already made my money on the on the SDS long. So I sell 75% of it, and what I do is I just put a in the money stop on the remaining 25% because now is the time that I can get greedy. We have this down move over here. Let's just say we consolidate and then we head down even lower, which is definitely a possibility, and that's actually what I wanted to talk about in this video. But getting back to the whole point of keeping that 25%, that 25% to me is rubbish. To me, it's just a nice to have. Meaning, if this market one day just crashes, obviously that won't happen, or that's not going to be as um, capable with the circuit breakers that they've put in place. But let's just say one day that did happen, because the markets are showing a lot of weakness. And if it does happen, I'll be sitting pretty in money. And if I went long for whatever reason, that 25% should give me some cushion. So basically, I'm just going to set it and forget it, put a trailing stop, if you will, on the remaining 25%. So if it crashes, great. If it doesn't, actually, if the market crashes, that'd be bad for all of us. But if we're short the market, then that's good for us individually. But if it doesn't crash and it goes higher, then I get stopped out and I still make profit off that remaining 25%. So it really doesn't matter to me, and it's a stressless trade. And those types of trades are the best because emotions are the worst killer, as we all know, in the stock market. In the stock market, technical analysis type trading or even fundamentals, if you're losing money, it's really going to be a killer for your emotions. So having that, selling the first 75%, keeping the last 25, the last 25% is I don't care about that. If I make money, great. If it goes the opposite direction, I get stopped out, I still make money, not a big deal. But it's the time or the way that I can play greedy. Anyways, I don't want to get this video too long. It's already 7 minutes and I haven't even gotten into this analysis here. All right, so real quick. So we had this down move over here. These supported levels 139.21, 137.51, and now the 135.40 level are holding up quite well. Let's switch to the 10-minute chart real quick. All right, so this is a 10-minute chart. This is Thursday's day here. Let me just zoom in on Thursday here. Now what we see is we come right into this 135.40 level, and again, these levels aren't perfect. Unfortunately, sometimes they're right to the penny like on the SDS, but sometimes they're not. So we kind of just cut through it just a little bit, and then we get that nice beautiful bounce before creating this shooting star, and then coming back down again and getting another bounce off this 135.40 level. Okay, now let's move into Friday. After we get that bounce, we come down and we already pierced through that level. So remember, once that level is hit, I cannot trust this level anymore. Meaning, once these mathematical calculations are used and abused, then I don't trust it anymore, right? But in any case, we do get that bounce. We come back close to, doesn't exactly hit it, but it's close to the 135.40 level. We actually got as low as 135.47, so that's about 7 cents off. To me, on a $100 ETF, 7 cents is not very good at all, to be honest. And then we get that bounce over here. So what does that all mean? What am I trying to tell you? What is going to happen next week? What do I think is going to happen next week? Oh, and by the way, this week we are finally done with the week of when the options expire. So as you can see, I mean, like I said in the last video, I mean, whenever you have the week that options expire, which is every third Friday of every month, you're going to see a lot of volatility in the markets, and we sure saw that volatility happen intraday and on the daily. Okay, so you just keep that in mind. And on Friday we got that pop, and that's what institutions like to do. Now, what do I think is going to happen? Well, basically, we are in a very oversold area today. Okay, very oversold. That doesn't mean just because we're oversold that we're going to get a bounce, but it gives it more of that probability, right? And we use technical analysis to determine supply and demand, and right now we are in pretty good support. We do have this hammer candle type sort of looking candle here, right? It's not exactly a hammer candle, but it's pretty close. And the beautiful thing is we are and have been doing it on higher volume. This volume for Friday was at 148 million, which is higher than the past three previous days. In fact, 4, 5, 6. So 1, 2, 3, 4, 5, 6 of the previous days. And you know how I am with volume. If you have a reversal candle and you're into support, which is good, this 135.40 level, let's see if we can get into any other technical support. There we have it. This pivot point right here, bam, just like that. We are in really, really good support. So we could potentially get a bounce. And this is, you know, if you're new to these videos, all you need is a single candle pattern reversal pattern. You need to be in pretty good support. So whether that be a pivot or a gap window, gap fill, um, or in a mathematical calculated level. Fibonacci retracements I do like, but I don't really depend on, but it's nice to have. But the key thing is volume, and as long as the volume is higher than the past previous 3 days, then you got something really, really going strong, in my opinion. So this means that there is a probability, meaning if I had to put the odds in my favor, I think that we are due for a small bounce. How big of a bounce that is? Well, that's gonna be a little bit of a tough one, and here's a little thing that I'm going to tell you. I wanted to go long the SPY, like I just said previously, just about I don't know, 7 minutes ago. Um, Let me show you what I meant. Right, so I wanted to buy the SSO, which is a two-time, I believe it's a two-time ETF for the SPY, and it's much cheaper, much more affordable, so I can buy a lot more shares, and I can make a lot more money. Anyways, to make a long story short, I had a mathematically calculated level for the SSO here at 5302. It didn't really necessarily line up with the SPY. I probably should have picked up some SSO on Friday, but I figured, I gotta trust my levels, and if I'm gonna be a technical analyst, if I'm gonna be a technical analyst, then I need to abide by my rules, and my rule is I'm not gonna take a trade until it hits my level. And because this is gonna be a counter trend trade, why take the risk, right? I'm gonna wait till the SPY gets into a pretty good resistance point before I buy the SDS again, which is two times short the SPY. So why would I take that risk, in a counter trend trade? Had I got into this 5302, and again the low of this was 5338, so that was that was quite a bit off there on this calculation. But if we, well, it looks really close here, but if you look at the numbers, it's quite a bit off. In any case, had we gotten into this 5302, I actually had an order in for 5305 just to make it an even number. We didn't quite get there, and it looks like we already have that reversal signal coming up. But one thing you have to realize, and again, this is the SPY chart now, is that risk reward, that's something that you really have to look at. If we are in a downtrend, which is clearly what we are, at least in the daily, on the daily chart, if we are in a downtrend, then why would you counter trend risk trade? What do I mean by that? Well, we have the 200 moving average here. We did not confirm the breakdown of this 200 moving average. Just keep that in mind, where we did not validate that this candle here, right? This candle was the breakdown candle, I should say, and this was unable to close. Let me just zoom in over here. This candle was unable to close below this candle here to validate that the move could potentially go lower, which indicated that this 135.40 level had or will hold water. You see what I'm saying? If had we closed, say right under there, then there is a possibility, and I would have made a video stating that maybe everybody should wait to get to the 131.58 level, which is what I'm gonna talk about in a little bit. All right. So getting back to what I was talking about. All right. So we have the 200 moving average here, which means that if we do get a bounce, there's a possibility that that's the biggest bounce we're going to get. So because I did not take the long trade on the SPY, I missed that trade. I am going to wait patiently. I'm going to wait patiently for that bounce to happen if there is a bounce. Now again, if you've watched my previous videos, you would have known exactly what to do on this trade here. If you were short like me, you would have dumped your shorts just like I did, and at this 135.40 level, you would have went long, just like I tried to do. But basically, if you are in a long trade, just make sure that you have a break-even stop, right? Because right now it's at 136.37. If you had got it at 135.40, then you're basically $1 ahead already, okay, at this 135.40 level. It pierced it just by a bit, but as you can see, you would be in the money. I suggest you put a break-even stop as of now. And when I say break-even stop, I mean that if you were to get stopped out, you would be stopped out clean. You would have not taken a loss. Please don't include greed, because that'll kill you. In my opinion, it's killed me a lot of times. Greed is just something very hard to get away from, as well as fear. In any case, To make a long story short, you should already have a break-even stop. In case this thing continues down, you just get stopped out break-even, like it never even happened, like you never even took the trade. In any case, I do see some resistance here at 137.51, whether that be an intraday or a daily. It would still be a short trade, right? And because we're in a downtrend, even if I'm wrong, say I take the trade at 137.51, even if I'm wrong, hopefully the trend will be in my favor, meaning if we get into this 200 moving average, right? And then now you see this downsloping trend line here. This is kind of a steep trend line, so I don't really trust it very much, but it is still nonetheless a trend line. And we have this trend line up here. Around this area here, so I guess in between this 139.21 level and this 137.51 level, we will have pretty good resistance. And in my opinion, that's what I would wait for. If we can get into either the 137.51, the 200 moving average, or the 139.21, it really depends on how conservative you want to be and how far of a stop that you want to have. And the markets are showing a lot of weakness, but we are again in pretty good support. So based on that, if we are in very strong support and you wanted to wait, or in my opinion, if I may actually wait till we get back up to this 139.21 level again before initiating another short, at least down into this 131.58 level, until I see a trend change, meaning the trend going back up. Right now I am still, and I will continue to be more bearish than I am bullish. And again, people laughed at me. I even had a comment on my Facebook that taking a short trade up here was probably not a very good idea. But and then they laughed at me again. Well, I wouldn't say laughed, but I would say they didn't really believe me when I said, okay, the trend has now changed because I'm sorry, they laughed at me. Not here. Here, okay, this was the level here. I said because now the trend has changed. We had a high, lower high, and a low, and a lower low. The trend has now changed on the daily chart. Maybe not the weekly, but the daily. We are swing traders, so we don't really care about the weekly. We just need the weekly to validate our daily trades. Now, from here, I already knew the trend would have changed, and the short trade was valid, and then boom, we get this long or far drop over here, and that's all she wrote. So that's my plan. Just like I've explained it in the previous video, if we go up, that's where I take the short trade. I may take it earlier, but nonetheless, if we break out or close above and validate that close or breakout above the 139.21 level, then I will probably stop myself out. So it really depends on how much of a stop that I want. So say I take the 137.51, my stop is now going to be at 139. That's a $2 stop. That's kind of a far away stop for me. But again, I don't want to miss the train. I miss the train a lot, but that keeps me safe. In any case, I did this in the previous video. Now I'm gonna do it in this video. If we go up, that's what I'm gonna do. If we continue down, however, I'll definitely be making money on that 25% remaining that I have on the SDS. And if we continue down, I do see some support at the 131.58 level. I don't know if we even get here though, to be honest, because we're gonna have some support before that. What do I mean by that? We have this gap fill level here. Actually, a lot of people, to me, gap fill is down here at the bottom of this candle. Okay, a lot of people say gap fill is over here, but that it doesn't make sense to me, because that's where that's where this day opened. The market opened on that day up on the top of this candle, but it actually closed on the bottom of this candle, which means that this would be technically, on a technical level, the gap fill. In any case, we will or should have some support at this gap fill level here. So just keep that in mind. We also have this pivot point here, so we have a lot of support coming up. I mean, tons of support. Right over here we have this pivot point over here, and then eventually we get into this 131.58 level, which I don't really like necessarily as much as the 135.40 level, but it's still there. It is still a mathematical calculation that as you guys been watching these videos, have been working out pretty well. So we just have to respect the fact that it is there, and that we could potentially get some sort of bounce in that area. Let me see if there's a nice Fibonacci retracement somewhere. And let me just grab my fib tool here, and I'm just gonna grab this low and go straight up to the top here. And yeah, so we have some resistance here at the 618. So yeah, that's even more of a probability that we may get a bounce. And then we have that 75% fib retrace at this pivot point down here. Other than that, though, I do have these mathematically calculated levels here at 131.58, 130.31, and ultimately 129.92 if we even get down here. But if we do get down here, then I may potentially wait for a double bottom before taking a long trade again. All right, this is a chart of the US dollar futures switching over. I did talk about in the previous video, 81.26 was the target level here, and that is definitely what we got into here, the 81.26 level. Bing, just like that, 81.26, we went right into it. We pierced it just a little bit, and then now we're just basically, what it looks like to me is we're kind of like consolidating here. I mean, sort of. It's not a very pretty consolidation, but it does and potentially could be a consolidation type pattern. We did, however, create this shooting star candle over here, and we did it on pretty good volume, as you can see. And of course, this is the US dollar, as we all know, is inverse to the stock market, therefore, or the SPY, I should say, or the S&P 500. Therefore, if you guys follow the dollar, you can pretty much tell what the market's going to do because it's inverse to the markets. It's not penny for penny. I just want to make that clear, but it is for tick, or more than likely tick for tick. So the more the government or the Feds drive the dollar down, the more the markets are going to be propped higher. Then that's how they've been playing this game for a very, very long time. In any case, they have this 81.26 level. Let me see if I can get another calculated level here. This 81.26 level, I created it on September 20th. So let me see if I can grab another one. Give me 1 second. All right, I'm back with new calculated levels here, and this is really interesting. Believe it or not, I have one all the way up here at 84.63. It's even past the double top here, and if we actually get to the 84.63, that's some bad news for the markets. I tell you that. So I kind of hope that, for our economy at least, we don't get to this level. Just something I wanted to quickly mention. Obama has, as we all know, has been reelected. So he really doesn't. He has another 4 years. He really doesn't care about propping the markets up as much as he was, last year, simply because he's already elected. So why does he need to, prop the markets higher? He should or may let the markets drop so he can prop it back higher again, because the cost of gas and everything was just skyrocketing, and he probably figured he'll do that until he gets elected, and then let it fall because or let it correct, because that's healthy for the markets. In any case, I do have this in addition to that, I have this 81.89 level over here that we have to pay attention to. So there is maybe a possibility we get up there, and that would make sense because we have all this consolidation over here before we had this breakdown. So this 81.89 level should hold some water. I do see another consolidation period over here, so this should around this area here should have some resistance. We have this pivot point here as resistance, and I'm only doing this as resistance because to those 5 of you who did like this video, I do appreciate it. So I'm just going to try and go a little bit above and beyond by making new levels as we go through this analysis video. So in any case, we are into this 81.26 level, so that is telling me that there's a potential of getting somewhat of a pullback before going higher. Keep this in mind though, we have the 20 moving average here, we have the 50 moving average right below it. Just like the SPY, we do have the 200 moving average saying, hello, I'm just right here. Keep in mind that we have a lot of support down here on the dollar, which means that there is a potential that we could actually go higher into this 81.89. So just have your stops in place, and just keep that in mind that we may actually either get a pullback or we might get go a little bit higher, but I don't know if we can get past the 81.89 level without consolidating first. We do have this 4-day consolidation period, so just keep that in mind. We really need to see a pullback, and that pullback to validate a pullback, I should say. Any close below this 200 moving average is probably going to be pretty decent pullback. And normally, or not normally, but if we do see a pullback, a close below this 200 moving average, then because the 20 moving, let me just remove this line, because the 20 moving average is kind of just lurking below, that's going to be a lot of support for the US dollar. And again, the US dollar is obviously inverted or inverse to the S&P 500, so you just want to keep that in mind. But if you've been watching my previous videos, you would have known that we are into pretty good resistance on the dollar as of now. All right, I always talk about one of the biggest stocks that we have on the S&P 500, and that everybody knows is Apple. Let me just make sure these drawings are up to date here. All right, now I created this mathematically calculated level on October 11th. All right, and again, you can you rewind these videos if you want to, but I had a level here at 51138. We have this nice hammer candle on beautiful, beautiful volume. Look at that volume. That is just unreal volume, in my opinion. This Apple traded looks like 45 million trades. All right, so with that said, um, I think Apple has a good chance to reverse. And in addition to that, let me just get this line just a little bit better here. Look at that. We are into some really nice uh, support over there. Let me see if I can get a fib level as well. I don't think so, but again, I don't really like fibs, but they do back it up sometimes. Yeah, so it already hit the fib 50. I got close to the 618, didn't quite get there. In any case, I had a level at 511.38. Had you taken the trade at 511.38, it is now 527.67. So that is what, a $10, $11, $15, it's a $16 increase in a single day. I think Apple has a good chance of having a multi-day bounce. Okay, so just keep that in mind. Again, if you're taking this trade at 511.38, I did not personally. I didn't take this trade, but had you taken this trade, because of the previous videos, then please have a break-even stop because you just never know. But as of now, because I already missed this trade, I'm not taking this trade on the long side. It is in a downtrend, so you know it would be a counter trend trade, and I don't see this stock getting past. Whoops. I don't see this stock getting past this level over here, and definitely not past the 591.51. Obviously, nothing's 100% guaranteed, but you know we have to take it day by day as technical analysts and make sure that we are on the right side of the trade every time that we pull that trigger. In any case, that's about it for this analysis. Again, thank you very much for liking these videos. Thank you very much for taking the time out of your life to view these videos or these videos, and you know, again, just keep those likes coming in. And if you're new to these videos and you want to subscribe, every time I see a new subscriber in this video, what I try to do is I try to go a little bit slower. I try to redraw my lines and whatnot. But if I don't see an increase in subscriptions, then I move on as if you guys already understand where I'm coming from and you guys are trading the way I'm trading, and or you know, just watching the way I'm trading, maybe not necessarily trading or doing the same things I'm doing, because and I want to make this clear that I don't want this to be something that you necessarily follow. I just put out these mathematical calculations just for anybody's benefit as a single indicator, meaning you should never trade based on one indicator, but this is just, you know, added arsenal to your toolbox of arson, I guess you could say, or arsenals or whatever. In any case, thank you very much. And I really appreciate it again for those likes. And that's about it. You know, God bless to you all. Thank you very much for watching these videos, and I hope to see you in the next one.